Hi, I'm Satyam.
Today, we observe the Indian stock markets continuing their upward momentum, driven by a mix of domestic strength and favorable global cues. The major indices once again closed in the green, marking a solid streak of gains that highlights the resilience of the Indian markets. Let's delve into today's performance, analyze the key factors influencing market sentiment, and explore what lies ahead. Starting with the major indices, the BSE Sensex closed at 81,053.19, rising by 147.89 points or 0.18%. The Nifty 50 followed suit, closing at 24,811.50, with a gain of 41.30 points or 0.17%. The Nifty Bank Index, a critical gauge of banking sector health, performed strongly as well, gaining 300.15 points or 0.59% to close at 50,985.70. These gains reflect continued investor confidence, bolstered by both domestic and international factors. In terms of trading activity, both domestic institutional investors, DIIs, and foreign institutional investors, FIs, were net buyers today. DIIs bought 2,971.80 Indian rupees crores in the cash segment, continuing their streak as net buyers over the last 14 sessions. This consistent buying by DIIs has provided a strong cushion against any potential volatility caused by foreign outflows, showing robust confidence in the market's fundamentals. On the other hand, FIs bought 1,371.79 Indian rupees crores in the cash segment, a positive shift after a period of selling. The return of FI interest is a welcome sign, indicating renewed global confidence in the Indian markets. Today's market activity was influenced by several key factors. Firstly, the minutes from the U.S. Federal Reserve's latest policy meeting signaled a strong likelihood of a rate cut next month. This news had a positive impact on global markets, including India, with information technology stocks leading the charge. A potential rate cut by the Fed is seen as a boon for emerging markets, as it could ease global liquidity conditions and provide support to equity markets. Investors are now keenly awaiting Fed Chair Jerome Powell's address on Friday, which could provide further confirmation of a rate cut in September. This anticipation is likely to keep global markets buoyant in the short term, with investors positioning themselves accordingly. On the domestic front, business activity in India continues to show robust growth. The Flash Services PMI index rose slightly to 60.4 in August from 60.3 in July, indicating strong expansion in the services sector. Although the preliminary manufacturing PMI showed a slight decline to 57.9 from 58.1, it still reflects strong growth. This continued expansion in both services and manufacturing underscores the resilience of the Indian economy, even in the face of global uncertainties. Today's session also saw both the NSE Nifty 50 and S&P BSE Sensex logging gains for the sixth consecutive session, adding about 2.8% each over this period. This sustained rally highlights the market's strength, supported by consistent buying from domestic investors and favorable global cues. Looking at sectoral performance, 7 of the 13 major sectors advanced today. High-weightage financials added 0.45%, reflecting the sector's importance in driving overall market gains. The financial sector has been a key player in the market's recent performance, and today's gains further reinforce its critical role. Consumer stocks also performed well, gaining 0.62% to reach a record high. The consumer sector's strength is a positive sign, indicating robust demand and confidence in the domestic economy. Despite these gains, analysts remain cautious about the potential for significant upside in the near term. Elevated valuations are a concern, and while domestic equities are expected to remain buoyant, the scope for further gains may be limited. This caution is understandable, as markets have already seen substantial gains over the past few sessions. As a result, investors may begin to focus more on stock-specific opportunities rather than broad-based market moves. As we look ahead, the outlook for the Indian markets remains positive, but with some caution. The consistent buying by DIIs is a strong supportive factor, helping to cushion any volatility that might arise from global developments. The return of FI interest is also encouraging, suggesting that global investors are starting to see value in the Indian markets once again. However, the market's near-term direction will likely be influenced by external factors, particularly developments in the U.S. Federal Reserve's policy. A confirmed rate cut by the Fed could provide a further boost to global markets, including India. Conversely, any signs of hesitation or a more hawkish stance could lead to increased volatility. Domestically, the continued strong performance of the services and manufacturing sectors is a positive sign for the Indian economy. As long as these sectors continue to grow, they will provide a solid foundation for the markets. Additionally, the strength in consumer stocks reflects healthy domestic demand, which is crucial for sustained economic growth. In conclusion, today's market performance reflects a continuation of the recent positive momentum, driven by strong domestic fundamentals and favorable global cues. While caution is warranted given the elevated valuations, the overall outlook remains positive. Investors should remain vigilant, keeping an eye on global developments while also focusing on the opportunities presented by strong domestic sectors. This video is made for educational purposes only. Please don't make any investment decisions based on it. Please like, share, and subscribe. Thank you.